The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. Okay, we have a technical problem, Al. I am getting feedback. I cannot turn my audio off thing on. You're going to have to help me because I'm not going to be able to continue listening to myself in the background. So can you help me fix this? Because I don't know what's wrong. When I try to click on to turn the audio off, it doesn't work. So I'm going to have to get out and try it again. So bear with me here just about a second. It'll only take me about 1 minute to get back in, but this is not good. 10-4. Yeah. Let's see, look at the bottom of the podcast mute button. I don't see a mute button anywhere. Nope, I don't know what's going on. Ah, shucks. All I do is hear my voice in the background, and it's a little more than not good. Give me it must be due to the full moon. Hold on, let me get out, and I'll come right back in again. Just give me a second, folks. Boy, what a total Oh boy, this is such a pain in the ass when I get these things here. Okay, 10-4, rubber duck. Let's see what's going on here. Oh, brother, not good, not good. Welcome from the offices of Duke and Duke. This is Billy Ray Valentine from 100 South Broad Street in Philadelphia. Folks, we're going to have Rich Anderson on at the half hour. Next week, we're going to have a couple of really special guests. On Tuesday, we're going to have John Person, an old friend from many, many years ago, former floor trader who's famous for pivot points. John's a private trader down in Jupiter, Florida. He'll be on Tuesday. And now we will also have on Thursday, we're going to have more research. Steve Moore and his group from, everything's cool now, I think. But he'll be on Thursday, and Steve does the best seasonals and spreads of anybody in the business. He happens to be a pretty good friend of Jim Twentyman. Steve Moore actually lives on a family land grant in Oregon that this land was deeded to them by Rutherford B. Hayes, the president, many, many years ago, like 180 years ago, or whenever Rutherford B. Hayes was president. But when they come on, I will post the land grant showing Rutherford B. Hayes, signature and stuff. It's really pretty cool. He keeps that in a big picture behind his desk, so that's kind of cool. So we'll do that. All right, we had some wild stuff yesterday, folks. The markets went absolutely bonkers on so many things. I think it was related to this lunar stuff, but you never know for sure. But, there were some horrible fills in some of the markets. I heard back from people that happened to be in the coffee market, which that's their own fault for being in the coffee market, where they had slippages of 2 and 3 cents when coffee went from 127 to 123 very quickly. Also in the silver market, there was slippage of over 12 to 17 cents per ounce on stops, which is that's just too much, folks. That's 750 to Yes, it's $750, $600. That's a lot of slippies. Now that happens, those are outlier events, but it does happen, and we'll see what's going on, with this. We'll watch it. We have some earnings out, but it's not affecting the market very much at all so far today. So we'll just see how the market's going to go. We're down about 20 handles from the high in the stock market, which isn't really very much, but we'll be able to look at it. We had some really wild swings in the grain markets yesterday, and we had a situation here at TFNN when we had an order in on the wheat to sell wheat, and what happened was those of you that were trading electronically were able to be filled because when the wheat was trading at around 15.14 or 5.14, we wanted to sell the wheat at 5.12 or better. But the problem was it was within 10 minutes of when the market was getting ready to open, and the market was already breaking. But you don't see that if you're only trading, an ETF, or you're only trading the the day session. So those of you that were filled on that turned out to be a really good move. And as you can see, wheat did complete a nice ABCD pattern yesterday, so that means we should probably get some type of a bounce today. This is just the first day down in a long time, and believe me, the shorts are absolutely scared to death. And so there will be some probably good rallies in this. Now, today when we were coming down in the gold, we made a 61% retracement of the low we made just the other day. Came right down to 1245 and held there so far. So as long as we stay above 1245 in the gold today, we should have a little bit of a bounce. But frankly, I think gold is looking like it wants to move lower. And yesterday was a perfect 786. Okay, we got a caller from our good friend in Martinez, California. Brent, are you there?
I am, Larry. How are you today?
I am good, my friend. What can I do for you?
I had a favor to ask. When Rich comes on, could you pose the question about the potash stocks, just the fertilizer area in particular?
Oh yeah, he knows that stuff really well. So what I'll do is I will get a chart ready, and we will put it into the room so you'll be able to take a look at it. This stock has been down for a long time, and even though it's had a little bit of a rally, it's still in a massive bear market. So we'll talk about that when Rich comes on.
That'd be great. I'd just like his opinion on that whole group, if you could.
How's the water situation over there in California? Is it any better?
It's raining as we speak.
Oh, this is good. At least you're getting some steady rains this year. That's fantastic. I'm glad
that
to hear
late rain is helpful.
Oh,
Keep
that's
that
very good.
Up. All right.
All right.
Well, I really appreciate it, Larry. Have a great day, and have a nice weekend.
Yeah, thanks for calling in and telling me, and I said hello, okay?
I'll do the same. Say the same to Sarah. Take care.
Okay, bye-bye.
All right, bye.
Okay, we'll have Rich on at the half hour, and we'll go from there. But we've hit some pretty interesting levels in some of these things. Let's just got to take a break already. Boy, time goes fast when you're having fun.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no questions asked money back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've posted a chart of Google. Someone's asked a question regarding their earnings because the stock was down almost $50 a share at the beginning of the earnings report yesterday. It's since bounced back quite a bit, but as you'll notice from the little green line that's there, that's the 61% retracement of the last move. That came in at 710, and I believe that was the low. I believe 711 was the low in Google in the overnight, but as you can see from that, it's showing at 713.65, but that was bouncing back. My charts don't put in the overnight action until the market opens, and then it'll put the data in. But that's what's happening to Google. So we've had some negative reports on Apple, Google, Starbucks, a couple others. Microsoft is also down 5%, so some of these are hit, but it's not hitting the stock market very much. There's other stocks, that seem to be holding it up, so it's certainly not the end of the world. It's hard for the market to be down on a Friday in an up week and in an up month, but it's still early, so we'll see, how things unfold as we go through the day. One of the questions that someone asked me via email yesterday was the lunar phenomenon that we were talking about yesterday, and I'll just repeat what we were looking at. We had a full moon. We were at apogee, which means the Earth was as far away from the moon that it can possibly be. That's around 256,000 miles. And then we also had the Earth was on the equator, or the moon was on the equator, and then also we had the p-index, which is the large number of aspects. If you looked at a bell-shaped curve, it would be out in the 98th percentile with more than 15 aspects occurring at any one time. Those are very, very powerful. They don't miss very often. When they do, There's, it's usually a surprise, but yesterday it seemed to work. At least, if maybe it only works for a day, I'm not sure. But that's what's looking, that was we're watching the markets, so far. The S&P is basically unchanged on the day here. The biggest thing to watch here, folks, from a perspective of some of these things we're watching, is this gold market. I really think that the gold is getting ready to come down one more time, big time, to wash everybody out, and then we're going to have a big move after that. That's the way I'm looking at it. I watched a webinar yesterday put on by my good friend Larry Williams, and he also was looking for a washout in the gold market. Yesterday in gold, the high that we hit at 1272 and change was an exact 786, spot on, 1.27 number. It was a beautiful Gartley pattern up there. And of course, silver was hitting 1772 at that time. Folks, silver is absolutely nuts over there. That thing dropped $5,000 in a matter of about 30 minutes, I believe. And some of the fills on the way down were absolutely horrible. So keep in mind that, these markets can be very, very treacherous. Coffee, I don't recommend anybody trading coffee, but, silver had been, pretty reliable. But lately, the volatility in this silver and the liquidity is really starting to get a little bit scary. So just keep that in mind when you're trading these markets. But you've got to protect yourself. So don't be shy about putting your stops in, because if you don't put a stop in, you're telling the market that you know more than it does, and that just doesn't happen. So keep that in mind as we, move along through here. I noticed that we have our esteemed president over in Britain today, talking to the Brits about why they should stay in the Eurozone, and I don't know why he's doing that. That's none of his business, but I guess he's going to make it his business. So we'll see how that turns out over a long period of time. So right now in the gold market, we're setting spot on at the 61% retracement of the low we made back on the 19th. That's also a 50% retracement of the low that we made back on the 14th. And we just went below it a little bit, and that tells us we're probably going to go down even a little bit lower. So we're right at the moment of truth here in this gold market, and we'll see how it transpires as we finish out the rest of the day. But it's got to hold this 1242. In fact, that happened to be the number that John Logan talked about on his TAS profile as being very, very important. And I have to say that he has some great work, so that looks pretty interesting at that spot. So we'll watch it closely. But if we do get gold down, we've been looking at 1190 for a long time. Hopefully we'll see what's going on. I've had a love-hate relationship with gold over the last week or so, because I've had some people that were long from the 1070 level that made a great deal of money, but I got them out around the 1245, and they get very upset when it's at 1270. Unfortunately, when it's back down again, they never said anything. So we'll see how this thing unfolds. I have to tell you a story. When I was in Drexel, I had a couple of clients that were really very, very close to me, and when gold was going up, we were long gold for a long time. But in January of 1980, I started selling gold at around the 660 to 660 to 680 levels, where I was getting out of my gold. And as you know, gold topped $200 higher than that at 865 on January 20th. And one of those gentlemen was, someone who we hung out with quite a bit. He never spoke to me again. I couldn't believe it. I mean, we made a lot of money. I'm talking hundreds of thousands of dollars. And yet he was so angry about that. And yet when gold went from 860 to $440 over a 4-week, I think it was a 5-week period, I never heard anything more about it. But I'll never forget that. And that goes back to what they told me at Drexel when I first started working, and that was this. People are accustomed to making money, and they're accustomed to losing money, but they're not accustomed to losing all of the money. But there's one thing that you cannot do. If someone wants to do something, do not talk them out of it. Because if you talk them out of it and it works, you're in big trouble. Well, not big trouble, but that's something that they just don't forget. And so when someone wants to do something, you have to explain what the risks are and go ahead and stick with it. But it goes back to Jim Twentyman's favorite quote, and that is, defy human nature, do the work yourself, and take the responsibility for yourself. That's basically what you have to do. So even though we have some good information here at TFNN, we do have times where the information is not as good as you'd like it to be, and that's true for all of us that are here. And we try to tell you that this is all part of a risk-based business, and you must take the responsibility for yourself. We'll give you some ideas, but you have to be able to do some of this yourself. So we'll keep an eye on what's going on with that. So pretty soon we'll have Rich on here, hopefully. If we don't today, I am going to be a little bit concerned because we've got everything ready to get it to work. So 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson of Anderson Capital Management on the line.
Good morning, Larry. How are you?
I am good. I'm hoping for a little bit quieter day than we had yesterday.
Oh yeah, that was just
Yeah.
unbelievable.
Rich, I have a question. Did you, on any of some of the customers that you have, do you have some really unusual fills coming back on stop orders, or did you were you involved with any of that?
Well, I wasn't, I was lucky enough to not be getting pushed out of the market, and I was using the over exuberance of the market to sell into it with open orders and stuff. In markets like this, the stop orders, everybody has their orders at kind of the same price, and so all of a sudden it hits there and there's a vacuum.
That's right.
That's in the old days we had the pit and there was a little bit of a buffer, but nowadays the market there's a designated, the exchange has one or two designated market makers for each commodity, like corn or bean oil, and they get to see the whole book. When you're looking at the market book, you're only looking at a small percentage of it. You're not looking at the whole book, and they're not going to allow themselves to get buried by a bunch of orders, so they can see that there's let's say 1,000 contracts to sell at $4 as an example, and there's hardly any bids left. Well, they're not going to take into that, so they're just going to step back and let it go. So I try and be away from the crowd as far as entry and exits. Use open orders so that when it gets to the extremes, I get filled. And a lot of times that happens, in the middle of the night.
That's for sure. Now, I had one person call me and ask him how could he, have slippage of 17 cents in silver, and that was the explanation that I tried to get him, but they don't understand that. But you're right. When there's vacuums there, the fills can be absolutely horrendous.
It's just a different deal these days because a designated market maker gets to see the whole book, and they are there to help facilitate the market, but they're not there to go out of business.
Yeah, that's for sure.
That's what happens.
Rich,
go ahead.
We have a question from one of our listeners over in California about the fertilizer stuff. He's been watching the price of potash, and that thing has been in a really strong bear market for quite some time. Is there anything going on in the fertilizer business? Because these grains went absolutely ballistic. They went parallel, pretty much like what silver and gold did, and now we're seeing a little bit of a pullback. But what are you seeing there? Anything at all?
The potash and all the fertilizers, the farmer has to look at the profitability before they're going to want to put more money into the ground. My basic theory, which I was sharing with you back in February and March, is that nothing happens till the farmer starts putting his money in the ground. And he's been putting his money in the ground for the last 2-3 weeks. That's, then people get concerned about the growing, but they're not spending the extra money on more fertilizer because their cost of production with the prices that they're at, didn't motivate them to do that. And this little pop here, well, everybody's bought their seed and they've got their plans. So we would need prices to be substantially higher than where they are now for a fairly long period of time, and that isn't going to happen for this year for the U.S. farmer because they've kind of made their commitments. So if there's going to be increased demand for fertilizer, it's going to come from some crop problems that we have this summer, which reduces the carry-out and makes for a higher level of prices for next year. This is a popcorn rally that was caused by the cash market being short, the futures being short, option expiration today, and you've got these guys. There were, as an example, there's 10,972, 375 make calls, 11,178, 380 make calls. There were 8,700. 390 make calls, 25,000 $4 make calls. So as we spiked up, they had to buy more and more futures. But this is just a short-term phenomenon, and I don't think it translates into the cash market. It may, however, translate into some of the people planting soybeans rather than corn, but that means they'll use less fertilizer because fertilizer isn't a major component in the beans like it is in the corn.
Is there any fundamental at all in these grains that would make, because we're just beginning the planting season and there's nothing out there to see, beans run $1.50 and, corn or wheat run $1.25 a bushel. I mean, in the midst of, no weather market or anything. And fundamentally out there, did you see anything fundamentally that would have caused this?
No, the only fundamental things are we did have some dryness in Brazil, and maybe that's 3 or 4 million metric tons of corn. And then the Brazilians, because of the dryness they're currently experiencing, not selling their corn. We talked about that quickly yesterday, so that the Brazilians bought 3 to 4 cargoes of corn to bring into Brazil to kind of force their farmers to start selling. But they've got their first crop of corn. They double crop corn down there. They got their first crop of corn, not willing to let that go until they can see that the second crop is growing. And then there was the flooding in Argentina, and that took, the Argentine Agriculture Ministry estimated that it took 3 million metric tons off their crop. But these aren't huge things. It's just the whole market was short. Commitment of traders showed it was short. There's money flow like there is into silver. There's money flow into soybeans. Goldman Sachs is out with a report today saying that there's nothing fundamentally justify this rally. That's true. It was all about money flow, and so it's a very temporary deal. Now we're going to go. The weather looks good for the next 2 to 3 weeks. We're going to go into a 4 or 5 week period where we're chopping around. Now the monthly charts say that, hey, maybe there's something up, and if we have another scare, this scare will be legitimate because it'll be a weather problem in the U.S. And then you could really see these things light up. But I suspect for the next 4 to 5 weeks, so we'll get kind of boring. After what we've been through, that'll be a big change.
Yeah, this is for sure. Now, you mentioned the other day, quickly, we had you on because of the technical problems, but you had mentioned that the soybean crop actually turned over in one day, that they actually turned as many contracts as there is soybeans. Is that correct?
Yeah, that's right. They exceeded the previous day's volume, the previous record day, one-day volume by over 200,000 contracts, Larry.
Wow, that's huge.
Incomprehensible.
Mm-hmm. It certainly is. And when you think that they roll over the crop in one day, boy, that's a lot of spec business that's out there, that's for sure. Is a lot of that hedge fund related, Rich? Is that where it comes from, or?
A huge amount of it was hedge fund related. You've got these asset allocators that decide, well, inflation must be going to go up if we're going to keep interest rates at this price, so we're going to put money back into the commodities across the board. And then the other thing was the cash grain merchants were out of position, and so they had to cover their short July beans when China started on Tuesday buying the 20 cargoes of beans down in Brazil and 8 to 9 cargoes out of the U.S., and they started buying back their July, keeping their Novembers on, and so you saw July beans gain over 24 cents in 2 days versus the Novembers, and that's just the commercials getting out of their short hedges into July and then moving them into new crop.
Mm-hmm. Well, Rich, we've got to take a little break. Can you stay with us and we'll be
Sure,
right back?
no problem. I'm here.
Thank you.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back with Rich Anderson of Anderson Capital Management. And Rich, we've had several inquiries here about the silver and gold market. I know that you've mentioned to us that, Shanghai started trading gold and silver on the 19th. And I don't know I think you told me that fact that they had suspended all fees for, the floor members so that they could trade commission free. So that probably brings some of this into play. But do you have any information for us on gold and silver?
Just that the silver's, to the vast majority of people, silver looks cheap to gold. Gold's more of a quasi-currency metal, and there's been money flow into what they perceive as markets that are low value, and if you get enough people trading, you can push a market kind of whichever way you want. So the Chinese have historically liked precious metals, and they're going to love trading them. That's. I look at silver this morning, and this little rally we've got. Well, obviously there's somebody still pushing on that market. They're not pushing on the gold so much because the gold's kind of tied to the currencies a little bit. But yeah, they can make these markets walk uphill if they want to.
That's for sure.
And it doesn't take much. Like we saw in the grains this week. It doesn't take much. The harvest in Argentina for soybeans last year was 46% complete. It's only 16% complete, so it's a little delay. And you get everybody in the wrong side of a market, and that's whether it be long or short, and that's what happens. They wash them out, and they wash them out quickly. That's why you look for the retracements that you set up. I also noticed that we did have a full moon yesterday, and there does seem to be more activity on full moon. I don't know anything about it, but there does seem to be more activity.
I don't know why either, but that happens some of the time. We had a question about cattle. Were they going to hold this double bottom that we made back in December?
Well, first of all, there's a cattle on feed report today at 2 o'clock Central Time.
Oh boy,
I'm hopeful that it'll be a bearish report because, keep in mind the grain market started their last rally here a few weeks ago out of a bearish report. So if that report is as negative, there's one more day of kill this year than last year, so the marketings will be higher, look higher than the year ago, but that's because there's just one more day in the month. But if it's a negative number and the markets try and push through that, I suspect that they'll find out that we're at a value level and opportunity will exist. That's kind of what I'm looking for. There's nothing I like better than a report that's really bullish or really bearish and the market tells you we're fully priced. And that's when you get the run.
You love those because once prices don't go lower with a bearish report, they only have one way to go, and that's up. What would you be looking for in cattle? Another couple cents down, 2-3 cents, or what would you be watching for really good value?
They right now the April cattle are $10 over the June. April cattle go off the board obviously at the end of April. The historical break is from spring to summer lows is $10, so we've already priced that in. So I'm thinking another buck or two here, retest the lows, and look for stops. And finding that there are none, we'll be in decent shape for a rally, and the rallies will be $3.50 to $5. The summertime historically hasn't brought about big bull markets. The big bull markets typically occur in the fall. Mm-hmm. Part of that has to do with as you get into October, early November, all the import beef that we have from Australia and New Zealand, they're at quotas, and so then they have to stop or pay this extra tax levy. And that, so it's the fall is when you get the big bull markets. But we'll have $3.50 to $5 swings that are very tradable.
Rich, someone's asked the question is, why do they trade live cattle? Because everybody eats the meat after the cow's been killed. I never heard that question before. There must be a reason for it. You're a cattle owner and feeder, so what, do you have any reason why they pick live cattle as a contract?
Well, historically they started out with live cattle because they've had a delivery process, and they had live hogs that they also traded. And they didn't have a consistent index to kind of mark the to price the beef. They eventually evolved that the hogs traded an index and settled an index, much like the S&P. But the cattle still trade live. It's kind of a historical thing. They haven't found an index that would be universal enough. There's more variability in cattle than there is in hogs. The hog index, the carcasses are much closer to being the same than they are in cattle. The quality and the size of the carcass is so different that the differentials that they'd have to have for discounts they've never been able to agree on, so that's why they haven't gone to an index. They have, however, gone to an index in feeder cattle, so that also settles much like the S&P. And on November they're going to change the weight on the index for the feeder cattle, but they just haven't. You have Angus cattle that maybe fatten out at 1,100-1,200 pounds, and you've got Charolais and Gelvies and Limousines that maybe are 1,600-1,800 pounds, and the difference in those two size carcasses, it's very specific to a packer because he's trying to put that meat in a box, and that meat goes in a box and gets shipped in a reefer truck, and so the big carcasses and the small, there's a difference, and they haven't been able to come up with an index that would adjust for all that. That would be my explanation.
How old are the cattle when they come to market, Rich?
Well, it depends on, they're born in the spring, February, March, April. They're weaned in the fall, so they stay with their mother through the fall, and so sometime in October, November, they get weaned. Now, some of them are put on feed right away, but a lot of them are then put back out onto wheat pasture in the Southwest and grazed over the summer in the Midwest on grass. And so depending on if they've gone back on grass, that adds another 4 or 5 months. So these cattle could be any place from 22 to 24 months to as many as 30 months, depending on how they're fed, versus down in South America where they're when they wean them, they just go back out on grass. And, on grass they grow, they gain weight at about half the rate they would if they were being fed corn and supplements.
Okay. Now, one other question that someone had asked about the cattle is when cattle get older, is the meat tougher?
The cow meat is the oldest meat that you see, and that's tougher, but that's primarily used for hamburger. And the reason they like cow meat for hamburgers because it absorbs the moisture. So when McDonald's is selling an 8-ounce patty of hamburger, it's probably got a half an ounce or more of water absorbed into that meat. So yeah, the real, it's called yellow beef. Old cows and stuff like that, yeah, that is tougher, and it's called yellow beef because of the the fat is old and it's yellow and it has a bit of a smell to it when it's being cooked. But you can take any meat, and if you marinate it or whatever, you can make it taste pretty good and change how tough it is. Okay. But a lot of the old cow meat, it goes into hamburger, and so if you go to McDonald's today or Burger King, that's cow meat you're eating.
Hey, listen, thanks for joining us, buddy.
Right.
We really appreciate it. We'll have you on in another couple weeks, okay?
All right. Have a good weekend. Take
You
care.
bet, buddy.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted the chart of the gold in the room again, just to show you the importance of this support that we had down here at this 1244 to 1242 level. The low so far has been 1241.10. Now, whether that holds or not, we'll have to wait and see. Someone's asked me a question about earnings and stocks, and frankly, that area I should leave that to Basil and Steve and especially Tom and Tommy, because I really don't do much. That's the understatement of the year in stocks, but I watch to see how they react. And we've had some earnings come out, and some of them have been really crazy. But the market doesn't always follow through, just like in the commodity markets. We're looking for this cattle report to come out, and hopefully it'll be very bearish is what Rich is looking for. And if you can get cattle down the limit, that might be a place to take a look at them, especially if they don't stay down the limit. If the report is really bearish and prices don't go down, they only have one place to go, and that's up. We saw that in the corn market when we had that terrible corn report, just a few weeks ago, and look what happened. Corn rallied, 50 cents a bushel without even batting an eye, and that was with no weather scare or anything. It just took off, along with the beans, the wheat, and the corn. So we'll watch these things as they go through here. So someone's asked a question about the lunar thing yesterday. I mean, there's nothing else to repeat. It was a full moon with some other stuff going on there. We had apogee and we had a p-index date, so all that stuff might have made the market turn, but it's still early. This thing could go right back up and make new highs. We could rally another 20 handles. Any market that can go down 20 points can go up 20 points. We've seen this before. We watched silver, make a vertical rise and a vertical drop. So these things can do that, and that's mainly because you got people in there with different opinions, and they voice their opinions by clicking the buy or the sell button. So you've got to respect that. But this is what we're watching coming into the weekend. There's a really strong probability that we should close higher in stocks today, even if it's just marginal, because of the fact it's an up week and an up month. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.